Are you ready to buy your dream home but have no idea where to start? Don't worry, you're not alone. Before you start scrolling through listings or crunching numbers, there are 5 crucial steps you have to take to set yourself up for success. In this video, I'll break it down in a super simple way, no confusing jargon, no fluff. By the end, you'll feel confident and ready to take the next step in your home buying journey. And trust me, step number 5 is a game changer, so make sure you stay till the end because most people tend to overlook this. Alright, so let's get right into it. Now, I like to think of these as your pre-steps to buying a home. When most people start to buy a home and look at the first steps, usually the first things to do are speak with a realtor or speak with a loan officer. But there are really a lot of things that you should do to set you up for success before you speak to a real estate agent or before you speak with a loan officer. I have people ask me all the time to connect them with a loan officer, and before I do that, I ask them a few questions to see if they are in the best position to succeed in their home buying journey. And so with that being said, let's get right into it. Step number 1, you want to check your credit score. Your credit score is like your financial report card. It tells lenders how reliable you are when it comes to paying back money that you borrow. The higher the score, the better your chances of getting approved for a mortgage and snagging a lower interest rate. Let me break it down. If your score is 750, you might qualify for a low interest rate that could save you thousands over the life of your loan. But if your score is a 620, you might end up paying a much higher rate. The good thing is, checking your credit score is easy. You can use free tools like Credit Karma app from your bank or request a free credit report once a year at annualcreditreport.com. And if your score isn't where you want it to be, that's totally okay. Focus on paying bills on time, reducing credit card balances, and avoiding opening new accounts. Over time, these small habits will improve your score and set you up for success. Alright, so next is saving for your down payment and closing costs. Think of these as your buy-in to the home buying process. A down payment is typically anywhere between 3% and 20% of the home price. So if you're eyeing a $300,000 home, that's anywhere from $9,000 to $60,000. Then there's closing costs, fees for inspections, paperwork, and processing your loan. These usually range anywhere from 2 to 5% of the home price. On that same $300,000 home, you're looking at $6,000 to $15,000. Now, I know these numbers might sound overwhelming, but here's the key. Just start small. Open a dedicated savings account for your home fund and set up automatic transfers. Even saving $100 a month makes all the difference. So if you got a tax refund or a work bonus, throw part of it into your savings, and I promise you it adds up faster than you think. Now, something that's really important to know is most people think you need 20% down to buy a home, but that just isn't always the case. And to be honest, most people don't put 20% down to buy their home, especially when they're first-time home buyers. So if you're thinking about buying a home, most people put down as little as 3 to 3.5% using an FHA loan. And I'm not going to get into the loan types in this video, but I do have another video in my page that goes into more detail about different loan types and the different types of down payment options that you'll have. And with that being said, step number 3, and now comes the fun part. You want to start setting your home goals. This step is all about figuring out what you really want in a home. You want to ask yourself questions like, how many bedrooms and bathrooms do I need? Or is a low maintenance condo more my style? What neighborhoods do I love? Are there schools, parks, or other amenities that I want to be near? For example, if you're planning to work from home, a dedicated office space might be at the top of your list. Or if you love hosting barbecues, a great backyard might be your priority. Whatever you decide, make sure you write everything down, rank your priorities, and keep your list handy because it'll help you stay focused when you start house hunting. And if you're going to be looking with your partner, it's very important that you guys sit down and discuss your wants and your needs, and you want to make sure that you're on the same page. There's so many times where I start looking with buyers, and a lot of times they're couples, and they are usually not on the same page because they never really sat down and started talking about what they want and what each person prioritizes. One might work from home and prioritize a home office. The other might not work from home and isn't even thinking about a home office. So you want to make sure that you're both on the same page so when you start looking, you don't clash heads. Alright, now we're on to step number 4. You want to pay down debt. Alright, so step 4 is all about paying down debt. Lenders will look at your debt to income ratio, which is how much you owe versus how much money you bring in. And here's an example. If you earn $5,000 a month and you have $2,000 in monthly debt payments, your debt to income ratio is 40%. Most lenders prefer it under 36%, but what does this mean for you? Well, if you're carrying high interest debt like credit cards, start paying it down now. Even small extra payments each month can help, and try to avoid taking on new debt like financing a car while you're preparing to buy a home. The bottom line is, the less debt you have, the more confident lenders will feel about giving you a loan. Alright, and step number 5, you want to research loan options. There's no one-size-fits-all mortgage. Understanding your choices can save you a lot of stress later. Here are a few common loan types. The first one is FHA loans. These are great for first-time home buyers or those with lower credit scores. FHA loans typically allow as low as 580 credit score, and they require a smaller down payment, but this does include mortgage insurance. Next is VA loans. VA loans are available to veterans and active military members. These loans often don't require a down payment or private mortgage insurance. And then there's conventional loans, the most common option, typically requiring a higher credit score but fewer restrictions. Knowing what's out there will help you ask the right questions when you meet with a lender and make the best decision for your situation. Alright, and there you have it, 5 pre-steps to set you up for success when buying a home. And just to recap the key takeaways, you want to check your credit score, you want to start saving for your down payment and closing costs, you want to define your home goals, you want to pay down your debt, and you want to research loan options. Alright, so you're doing exactly what you need to do. You're researching what you need to do next, but now it's time to take action. Whether you're just starting to plan or ready to dive in, I'd love to help you every step of the way. If you have questions about your credit, savings, or finding the perfect home, reach out to me anytime. You can call, text, or email me. I'll leave my information in the description below. And if you're in the greater Boston area, let's connect. I'd love to help you find your dream home. And before you go, don't forget to like this video, subscribe for more tips, and share it with anyone you know who's thinking about buying a home. Thanks for watching, and I can't wait to hear from you. I'll see you on the next video.